Imagine dedicating your life to hard work, saving diligently, and building a nest egg for your retirement, only to have the government move the goalpost when you're finally ready to enjoy the fruits of your labour. Well, the government's new superannuation tax could fundamentally change your financial future. And here's what might shock you most. Certain politicians appear to be getting special treatment under these new rules. Let's break down what they're really doing. First, they want to slap an extra 15% tax on earnings for super accounts over $3 million. That's on top of the existing 15%, making it a whopping 30% tax. But here's the kicker, and it's a big one. This tax applies to unrealised gains. That means you'll be taxed on profits that only exist on paper.
Yeah, there's been a really big issue out there in this country, and that's been this taxation of unrealised gains. This is a fundamental change to the tax system in Australia. It is a diabolically bad socialist, sort of move which will destroy incentive in this country.
Imagine your property or shares go up in value, even if you haven't sold a thing, even if you haven't seen a single cent of actual cash, a tax bill will land on your doorstep. This is a massive shift, a significant violation of an important tax principle. You could be forced to sell assets, your farm, your investments, just to pay a tax on money you haven't even made yet. They say it's about fairness, a modest change they call it.
We've made it clear that it's a very modest change. It only affects 0.5% of people with balances over $3 million.
But is that the whole truth? Or is this another classic case of government spin, a Trojan horse designed to eventually hit everyday Australians who've simply worked hard and saved for their future? If you think, oh, $3 million, that's not me, think again. This $3 million threshold, it's not indexed to inflation. That's right. As the years go by, as inflation eats away at the value of money, and as your super hopefully grows, more and more ordinary Australians, people who are nowhere near being millionaires today, maybe even younger Aussies in their 30s, will be dragged into this punishing tax net. It's a slow creep, a tax designed to catch more and more of us over time. Some experts are warning that over 1 million taxpayers could eventually be hit.
The government is doubling the tax on earnings for balances more than $3 million. New analysis by the Financial Review suggests 1.2 million taxpayers could be impacted in 30 years' time.
Now, before we get into what is perhaps the most infuriating part of this whole scheme, and trust me, you'll want to hear this. If you're finding this information valuable, if you believe these are issues that need a spotlight shined on them, then please take a moment to hit that subscribe button and the notification bell. This channel is dedicated to bringing you the news and commentary that affects you, the mature Australians who built this country. Don't miss out on our future updates as we continue to unpack what's really going on. Alright, let's get back to it, because this next bit is a real eye-opener. Guess who might get special treatment? Yes, you guessed it. Politicians. Federal politicians and other senior public servants on those old cushy defined benefit pension schemes might be able to defer paying this new tax until they retire. Can you believe it? Special rules for the Canberra elite, while you, the hard-working taxpayer, will be forced to pay up year after year on your paper profits.
That Anthony Albanese and federal politicians on the old pension scheme won't have to pay this super tax on funds of more than $3 million until they retire. And that puts them in a different category to ordinary Australians who, controversially, we know under this legislation will be paying tax on money they don't have yet.
There is interest payable that is calculated in a defined benefit scheme. It is the same way that other superannuation tax changes and other changes have been applied to the defined benefit scheme.
One rule for them, another for the rest of us. It is outright appalling. This isn't just about a tax on a few wealthy individuals. This is about a fundamental attack on the principle of saving for your retirement. It's about the government changing the rules halfway through the game, taxing money you haven't even seen, and potentially creating special loopholes for themselves while the rest of us are left to foot the bill. Is this the fair go we expect in Australia? You decide. But make no mistake, what's happening with superannuation right now is something every Australian who cares about their future and the future of this country needs to be watching very, very closely.
There is a brutal reality to this. We know that once they get the administration of this tax on super, they will seek to replicate it elsewhere on trusts, on businesses, on property. And that's why it's so important to defeat it now, because they're looking not just at the revenue they're going to be able to get from super, they're looking at the revenue they're going to be able to get all over people's private investments.
So there you have it. The changes are coming and the implications are serious. If what you've heard today has concerned you, if it's made you angry, or if you simply believe more Australians need to be aware of what's happening to their financial future, then I urge you, please subscribe to this channel. It helps us reach more people. But more importantly, share this video. Send it to your friends, your family, your neighbours, anyone you know who has worked hard, saved diligently, and deserves to understand how these new rules could impact them. It's time we all started paying very close attention and made our voices heard. Don't let them do this in the dark. Thanks for watching, and we'll see you in the next video.